Hello from Trend Signal for a review of the data and events the week beginning the 18th of December, the final full week of the year. In fact, not quite full week of the year. In fact, UK stock markets close early on Friday at 12:30 p.m. So they have the final closing call at in fact 12:35, but it's a half day effectively. US stock markets open regular hours on Friday. So bond markets, FX markets and commodity markets closing at the usual time. Far East markets were pretty strong overnight, Sunday, Monday morning. The Santa rally is the reason being bandied around, but it's more likely that the market is full of hope for the US markets and Trump's tax reform bill, which is hopefully, according to the Republicans, going to go through Congress, but we'll get onto that in a second. As I speak on Monday morning, the Dow Futures is already signaling a 100-point rise, and that's on top of the 143-point gain on Friday. Markets last week, well, it was the DAX and the Nikkei that shed some points. The DAX just 50 points easier on the week, slightly firmer euro towards the end of the week. The Nikkei also suffering from a firmer yen, 257 points down on the week, about 1.1%. Currencies were really flat on the week. The euro just a tad weaker against the dollar, but picking up towards the end of the week. Sterling suffering from a little bit of buy the rumor, sell the fact type thing, down 64 pips, which is still a very modest move on the week. Dollar yen down 114 pips, that's about 1%, and that's the reason for the Nikkei's fall. But trade on Monday morning, a little bit nervous ahead of a possible vote on the tax reform bill in Congress on Monday, in fact. Gold up $7, benefiting from a little bit of angst in the markets, but nothing too much. Certainly not a strong dollar anyway. That petered out midweek. Oil unchanged across the board, really, despite the hairline fracture to this crude pipeline in Aberdeenshire in the UK. Which could see that pipeline out of action for 3 weeks, and that carries about 40% of Brent production from the North Sea. So you can see why it impacted the markets the way it did. Okay, so the main event really, well, it's possible that we could have this vote on the tax reform bill in Congress. It looks like Donald Trump has mustered enough support to get his tax bill through. The main thrust of the bill is this cutting corporation tax from, it surprised quite a few people to know that the tax rate in the US is 35%, but it is, and that's one of the reasons why Trump wants to cut it. So the idea is to cut it from 35 to 21%, which will bring the US back in line with the average corporation tax rate in the developed world. The success of the bill, well, it depends on couple of things. Well, firstly, the health of 2 elderly senators, one of them being Bob Dole, who's not well, and 2 senators that were concerned about child tax credits and following concessions there. I think they've given their support to the bill as well. So it looks like Republican leaders in both the House of Representatives and the Senate want the vote on Monday, that's today. So whether it manages to succeed or not, time will tell, but companies are going to do pretty well out of this. That's US companies, of course, especially the ones that pay the highest tax bill, which I guess is pretty obvious, really. But that list includes something that we often talk about, the financials. That includes the banks, who pay a lot of tax, airlines, oil refineries, and really transportation in general. Those companies do pay a lot of tax. So we'll see how that affects the markets. But since November the 27th, the Dow has rallied just over 1,000 points anyway, which is, 5%. So difficult to know how much further it can go. But for those tempted to bet against the market, statistically, this is not an appropriate time to bet against the market. The so-called Santa rally effect has not started yet, which could well add even more impetus to the market, but we shall see. Okay, data events this week. It's a fairly light calendar this week, really. A couple of events that aren't listed here on Forex Factory, which is firstly the Brexit negotiations are moving on to the next phase. Theresa May will be meeting with her cabinet to discuss the trade and security element of these Brexit negotiations, known as Phase 2. That we'll probably get sick of talking about it in the new year, but that'll be talked about until we've worn it out. The Chicago Mercantile Exchange, or CME, launches their own Bitcoin futures on Monday, following on the heels, hot on the heels of the CBOE's launch of their own contract last week. Volumes were thin and prices volatile, was the report. Well, there's a surprise. Other than that, nothing really much on Tuesday to report either of any note. We're going to jump to Wednesday. Mark Carney, Governor of the Bank of England, will be speaking about the November Financial Stability Report at a Treasury Select Committee hearing in Parliament. We then have the weekly crude inventories. Well, we've already mentioned about that pipeline, but I think the volatility in the market suggests there's a bit more polarization now, which suggests or could imply that there may be a turn in the trend at some stage. But that volatility, like we saw at the beginning of the year, can last for some time. In fact, over 2.5 months, we had that rather odd, choppy market in the crude market. But new year, we'll see how that goes in the new year. Bank of Japan monthly policy meeting, no change expected there, although some interest in the press conference afterwards, which you can see that's early doors as well. So when we get in on Thursday, we'll know all about it by then. On Thursday, another event that's not listed here, we have the Catalan regional elections in Spain, assuming Catalan is still part of Spain. That could affect the euro if the pro-independence parties are successful. Of course, the Spanish government called the election because they felt this was the best time to do it. A lot of Spanish companies declared that they would move out of Catalonia if the region was deemed to be independent of Spain. So we'll see how that goes. I think the results will be on Friday morning. US, we have the final reading of the third quarter GDP, the value of goods and services produced in the United States. Very strong number from the second reading. Third reading is expected to be unchanged at 3.3%. You can compare that with the UK's reading and actually the EU. They're quite a lot stronger. And with tax cuts to come, God knows where that's going to go. There will be interesting focus on interest rate expectations in the new year, should all this come to pass, which we expect it to do, of course. Friday, UK current account. This is the difference between the value of imported and exported goods and services. We've been in deficit for as long as I can ever remember, from a young lad. 21.3 billion, big number. Just they're all big numbers, to be honest. And then finally, we have in the US, we have the core durable goods orders. It's there are two readings. It's the core number that the market is interested in, a slight dip from the previous reading of plus 0.9%. This is the sale of durable goods, as the number suggests, the description suggests, but it excludes these large ticket items such as aeroplanes. But it's a number that can be and is watched quite closely. But of course, will have probably finished by then, as it's a half day in the UK, certainly for the markets anyway. That's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.